I am Suzanne Siracuse. Welcome to season 2 of my podcast focused on the future, keys to building a profitable, sustainable, and impactful business. And I am excited to be partnering with wealthmanagement.com on this. This series will focus on what firms need to embrace to ensure their growth and success for the future. And you'll hear from industry leaders and advisors on what is working for them. I have a great lineup of guests in store, and today I'm talking with Liz Nesvold. Liz is the chair of Emigrant Partners, a capital and advice partner that makes minority investments into wealth, asset, and alternative asset managers. Liz is an industry veteran with over 3 decades of experience as a passionate advisor, investment banker, and executive. And welcome, Liz. I'm so excited for you to be here. Thanks for being my guest. And I'm really happy to be able to share your story with our industry.
Thank you so much, Suzanne. Great to be here.
Great. Let's start out. Let's set the stage by learning a little bit about your personal journey into the wealth management industry. How did you get to where you are now? What's the story behind the story? Did you always want to go into making deals and all of that? Was that something that you were born with? How did that all come to be?
Oh my gosh. Yeah, I'll say humble beginnings, but the journey, I would say it really began in the first months of my first job, which was not in wealth management. But the funny thing is, it would take me years to put the pieces together on the subconscious influences that brought me to where I am today. My father founded and built a union-based steel erection company and did steel framework for incredible buildings that still stand today. And my dad had a wonderful sense of humor. I have to throw this in there. His company's tagline, it was Binghamton Steel Erectors, we get it up quicker. Oh my goodness.
Oh my God. Now I know where you get your sense of humor from too. Oh my God. That's fantastic. I love it. Ahead of his time.
He wasn't, much to my mother's chagrin. I didn't really get the reference until I was in my late teens. But unfortunately, my dad got cancer, and post his cancer surgery, he ended up having a stroke in the ICU, and that completely changed our family dynamic. My parents had done a fairly decent planning job for liquid assets, but the interesting thing back then is my dad didn't see the business as an asset. Nobody talked about it as a family asset. And it was a major company. And post my father's cancer surgery and stroke, my mom, standing at 5'2", the rock star that she was, stepped into the business, bossing around iron workers, and completed every project, ensured all the iron workers had a good path for retirement or transition to something else. And then she liquidated the business assets. And that was all while I was starting my first role as an investment banker, covering financial services.
My gosh, I didn't know you were going to say any of that.
I didn't either.
But it's so many influences as to where you are now and the advice that you give others, and how interesting that your dad didn't view his business as an asset. And I love that you mentioned your mother, especially back in the day, just coming in and taking over and getting the job done when it needed to be done. And I love that you highlighted your parents, and I love that especially you highlighted your mom. I know you recently lost her, and we talked as many, again, there's no words when you lose a parent, but we talked recently about how lucky we felt as women in this industry, in living in a very male-dominated industry, that we had such strong women backing us. And I know, talking to a lot of women in our industry, they had such support from their families, and they had such great role models in their mothers, and how their mothers were such a huge reason for where they are in their careers. And so just a little tribute to the moms out there that have really been sometimes in the forefront, many times behind the scenes in making the leaders of today exactly who they are. So just a little tribute there, because it's really, I think we're lucky that we had that.
Absolutely. I would not be where I am today without a number of people, but my mom is certainly at the top of the list.
Yeah.
But it was at that time that all of this was going on, that I was doing M&A advisory work in financial services. And you'll remember the big hype back then was really mutual fund complexes and checking the Morningstar boxes to acquire a large cap growth manager or a small cap international manager. And I was privileged enough, while some of this was still so fresh, of working with a couple of businesses that were really the trust company side, called Personal Trust and Advisory. And for me, as a banker in my formative years, that space really captured my heart, because it was filled with these smart, caring people helping families with generational planning. And it was the first time that I started to focus on the fact that my family hadn't done the business planning that it needed to do. And so as a result, we ended up in the fallback position. But here was a sprouting industry, really predominantly controlled by banks and trust companies, but where it was wonderful people in a human service business helping families to plan for their future, in some cases, successor generations of family members that might not even be in the picture. So as I grew up, I spent more time around this space, and I made it my coverage area. And I started a little practice of M&A advisory in the personal advisory space. And then, something like 17 years ago, I called my husband and said I wanted to launch a business around this space. And then, of course, I called my mom. And my mom said, "You can do anything you put your mind to. Go for it." And my husband said, "Put together a business plan." These two people who've been so influential in my life. My husband became my CEO coach, and my mother actually became my first board member. I'm grateful for their contributions.
Wow. I love that you had that like personal advisory board of your husband and your mom. The other thing is that you were like really ahead of your time, right? So now M&A is talked about constantly, right? It's everybody's thinking about this topic and how you value your practice. And I don't know about you, but when I first started, like nobody was talking about that. That was very, very specific. There were a handful of firms that were even thinking about that. And so the fact that you saw that as a specialty, and would you ever have thought that what you were specializing in was going to be such a huge part of the business now?
Oh gosh, not in a million years. It was referred to as carriage trade business or mom and pop shops. And the bigger investment banks didn't focus on it because the assets came in onesies and twosies. And for me, again, back to the human capital element and the people really serving other people, what we would come to learn is that those onesies and twosies would stay for 15 plus years on average, versus the assets into a mutual fund complex or institutional manager that may have a much more finite time horizon for investment. So I could never have envisioned that we'd be here today with 17,000 independent RIAs and tens of thousands of 1099 advisor practices. It's just unbelievable.
It really is. I remember when I was at Investment News, and I remember this cover story we did. And I got to go back and think about what year this was, but let's say it was 12 years ago. And it was called $1 Billion Babies. And it was highlighting the largest RIAs in the industry, and that there were now these billion-dollar businesses. There were only a few of those. Now you look at, like I just interviewed Shannon, $30 billion firm, right? Colony Group, all of these, Mariner, Mercer, they're exceeding way above and beyond all of that. It's just mind blowing how quickly this all happened, right?
It really is. And it's a testament to the early, let's say the early pioneers in the business and the paths that they charted and their desire to really build a good business as opposed to leave it a practice, if you will.
Yeah. So anyway, you're definitely a trend spotter for sure, Liz. And then just really quick, and so you started your firms and you've been in the investment banking world. And you recently are now at Emigrant. So how did that come to be? And I feel like you're like in this really amazing place now.
I am so fortunate. I am so fortunate to be here. And it was years in the making. Howard Milstein, my boss, will tell you this. 17 years ago, I was privileged to represent a firm called Region Atlantic that was one of the first two firms on this platform of long duration in a minority non-governance capital. And then when it came their time to look at a subsequent event, I was privileged enough to work with them. And then a number of other firms, wonderful clients and firms that have been supported with capital and resources by Emigrant Partners that are big firms today, like Pathstone and Sarity had humble beginnings here, and just really top-notch people. And a funny thing, every time I would do a deal for Emigrant Partners and Howard Milstein, he would say, I think we should work together. And I thought he was just being nice, but invariably we would get together and he painted a vision of have fun and make money. And it's hard to beat that. And I laugh a lot, as you well know. And so it was a nice dovetail into being able to be influential and supportive of one of my longtime friends and mentees, Jenny Souza, who is the CEO of Emigrant Partners, and some incredible colleagues that are here today.
And so switching over to this podcast theme is about the future, right? And what firms and individuals need to do to be successful now and in the future. So you deal with a lot of different firms and a lot of different CEOs and advisors that work for those firms. What are you seeing as the critical areas for them to consider in order to serve the changing demographic that's happening out there?
And things are changing. Things are evolving at quite a rapid pace. But since I've spent 30 years advising founders and executives on building great companies, my lens is really geared toward the business of wealth. And so while I know everybody's talking about AI, I know that it will shape how we provide services, but this is still predominantly an intangible asset business. Humans, this is sophisticated and caring people, and job number one is to find, nurture, and retain great talent. And job two, taking from that point, is to provide quality tools and the operational infrastructure for advisors and support teams to be successful. And if you don't make the proper reinvestments in the business, then you essentially violate elements of job one. You will not keep your people. And it's too competitive a marketplace not to keep your people. And then as we build on that, I would say job three is to chart a path forward that focuses on growth. Organic growth is critical to sustaining talent and driving the cash flow necessary to make reinvestments in the business. And you have to have an organic growth plan. You do. And when I think about the tools and resources that we have at Emigrant Partners, that's exactly why Mark Bruno launched his RA Plus podcast series, is that there are so many different approaches to organic growth. And the industry needs more education about best practices and, frankly, lessons from the worst unsustainable practices, because the landscape really is changing.
Yep. Those are three really important points. You got to have great people. You got to have the infrastructure and the operations to put to make them happy, to get your business set up for success. So the structure is there, and then you need an organic growth strategy. And I think those are really critical. You're hearing more and more people talk about the importance of organic growth. I think the headlines were shifting to M&A, and we're going to talk about that. But you need to have a combination, right? Because it can't all be a one-trick pony or one, what I would like to say, one revenue generating source, right?
Absolutely.
Those are great examples. Now, speaking of M&A, we were recently on a panel together discussing M&A valuation trends in the wealth management industry. And one thing that came up that I thought especially interesting and that I didn't hear a lot about, and still don't, quite frankly, was the next gen advisor to total advisor ratio is now a line item that influences a firm's valuation. So can you speak more about that, as well as some other key levers that affect getting a high valuation?
Absolutely. Continuity and succession planning has become increasingly important in the industry. And that was our initial mission for Emigrant Partners and the formative platform over 17 years ago. To support independence and business evolution. And the reality is there can be no evolution without successor management, and that has been cultivated and equitized, critically important. So today's valuation can either reinforce your reinvestment in next-gen talent or simply suggest that a value is based on a perceived declining annuity and shredding up the cost of your business as you get jammed into something else with integrated savings. But here's the key. Every founder has the power to decide that path. Do you want a smaller slice of a much bigger pie and be rewarded for it? Or do you want to sit in the corner by yourself with frosting on your face? Organic growth matters. We talked about this, but the next gen, seeing that there is talent there, seeing that there's been a pathway for pushing equity, bringing people up, growing the human capital of your firm, changes the valuation. The perception is either you are a platform company because you have made these reinvestments in human capital and operational infrastructure, or that frankly it is a nice stream of revenues and somebody's basically pricing you for those revenues. It's radically different valuation. You asked about some of the other levers. We talked about organic growth. That's critical. Showing that you know how to develop business consistently is critical. And there are two lenses here. One lens is, are you a business that is ripe for investment, or are you a business that really belongs as a piece of a larger business? Because again, you haven't made the necessary reinvestments. Some of the value assessment is really around, is this a standalone platform business that we're investing in, or does this business really belong as part of a larger entity? And there is value for both types of situations, for sure. It's just a function of how much value. And can somebody make an investment in you because you've already made an investment in yourself? And so back to a platform valuation, it could be that you've developed a deep bench of talent that has a value uptick. It could be that you've developed client affinity groups or pockets of clients that are interesting and serve very well. So whether it's actors, writers, producers, directors, and you're really in the entertainment space, whether it is special needs advisory, focusing on NIL, name, image, likeness, value around athletes. There could be value in terms of the types of clients with whom you interface as part of the uptick. So it really is a broad set of drivers of value. And to one party, they will see more value than another who already has those capabilities. So it's, I say, the beauty is in the eye of the beholder. But in this instance, the beauty assessment is really from the lens of the investor or buyer. And you can have 10 different groups looking at the same set of cash flows, the same materials, and everybody assigns a different value. But one thing is for sure, sustainable profitability matters, not pro forma adjusted, take out this cost, fire these people. That is temporary profitability, and a third party will see beyond that. So it has to be sustainable profitability.
That is so interesting. I think it's really, so do you ever have firms that think they're the standalone brand, but they're really more of a tuck-in? And then do you have to navigate that, give them the hard news?
I suppose in my old life, yes.
Yes.
I was known for telling people what they needed to know, not what they wanted to hear.
Yeah.
And those are the tough of counsel conversations that you have to have as a banker. Now I have the luxury as a minority investor in the space to be able to work with both. There is an opportunity to take a firm that has yet to reinvest in all of those levers to being a real platform company. And that's why we have to have more than capital to help somebody develop their business, develop their next gen, put an equity tool in place, think about additional organic growth drivers. So for me, it's fun to be able to look at businesses on both sides and say, platform company, yes, they've developed a lot of these capabilities that make for a sustainable business, but they may need support on the capital front and support putting an M&A strategy together, versus a firm who's really trying to figure out a lot of these other elements before they get there.
Yeah. What an asset you are to have at the Emigrant team to know, have all that background, because I think that is, the more you do, right, the more experience you have, the better ability you are to see all of that much clearer, I would imagine. So there are a lot of firms out there that are looking to get into the game, either as a buyer, or there are a lot that are reaching that retirement age. They are ready to take on a lighter load. So as a seller, so what are like what's the one key recommendation for both somebody that's considering buying for a firm or firms, and for those that are looking to potentially sell their firm?
Boy, this is a serious business and a serious decision. You'll recall that I said on that M&A panel we were on together, and I'll memorialize it here. Whether you're a buyer or a seller, do your homework. Do not engage in M&A because you think it will solve problems in the business. Don't invest or acquire into this space because you want to create a roll-up and jam a bunch of businesses together. M&A is not a business strategy. It is a tool to support your vision and the path that you've charted. It is such a wonderful tool as an add-on to the other things that we talked about, building a sustainable business. It could be that you've done your homework and you've had clients that have migrated from the Northeast down to the Southeast in Florida, and you're really thinking about M&A as a way to better serve those clients in a geography with like-minded individuals. It could be to add ancillary resources like trust and tax planning, compliance, bill pay, CFO services. There are a whole host of reasons that you may engage, but you have to think it through. Well, you need to understand the whys behind M&A. And in a growing business, often this tool, even back to the early days, was used as a means to gather wonderful people a little bit quicker than finding one at a time and trying to get them to work well together. So defining your mandate, understanding why you're doing this and what you're looking for, and really putting that partnership criteria together is critical. Whether, again, buyer or seller, the more sophisticated buyers, and you've mentioned a number of them, as have I, invariably they may be looking more at the lens of finding additional talent to serve in different markets, as opposed to adding more arrows in their quiver. So that's really the assessment. If you believe you're a standalone business, then on the sell side, it's clear that you're really not looking to marry up with a firm that already has everything. On the flip side, if you're looking to invest in a business, you have to determine what cycle you're at in their growth evolution. If you're really just capital and supportive counsel and a fiduciary board, you're looking for a more mature firm that's really developed the platform capabilities versus somebody like Emigrant Partners, where we can really run the gamut and we can help those firms that have yet to really achieve their full platform status. So it's really important that you do your homework.
Yeah, that great advice as usual. I think that whole, it's the shorter way to get great talent is a big selling point. That's, I think, so many CEOs and owners that I talk to, that's like the area that they struggle the most with, right? I think that's an interesting point of how a lot of M&A activity talks start with trying to bring really talented people together to execute on a like-minded mission. Great points. Now, what about after the deal closes? We talk a lot about the importance of culture match when it comes to deals living happily ever after. But what is your advice if there are bumps in the road? And gosh, I could write a book on this one, but what's your advice if after the deal closes?
It's work before you do the deal, while you're doing the deal, and then after the deal. Some of the larger companies will have integration teams with blueprints on how this is going to get done. But for others who may be pursuing M&A as a first-time buyer, you need to think through what is that experience going to look like for somebody who's joining you as a partner in the business. The first 6 to 9 months are formative in your partnership, and it really is. You're entering into a business marriage, so you need to work at it. You need to make sure it's participatory and that people have a chance to find their footing on integration and that nothing is jammed. And invariably, there will be bumps. It doesn't matter if you're a big company who's done 20 deals or a small company who's doing their first deal. You have to expect the unexpected. And when the unexpected comes up, this is a business about humans working and talking with other humans on the client side. It's no different when you become partners with somebody else. You've got to talk it through. And everybody always talks about, and I'm married to a former JD, so it's the 4 corners of the document when you look at the legal aspects of your business marriage, but you can't document everything. Everything will not show up in the 4 corners that you could ever anticipate. Could we have anticipated the pandemic, the financial crisis? These things are not things that we hope for. But when a bump in the road happens, you have to be willing to hear the other side and try to be collaborative and think it through. And that's the most important piece of advice that I can give you about making sure that you do better than a 50-50 average on successful M&A over the long term.
Yeah, that's, again, great advice. I always like to say, remember that whoever's trying to buy you is on their best behavior. It's like a date. And then you're married for 10 years and maybe some of the same things aren't the same way. So it's make sure you have your ears and eyes open when you're in discussions with potential acquirers. That's for sure.
Exactly. They're leaving the socks on the floor and the toilet seat up.
Dishes in the sink. Just think about that. So as mentioned, you've been in the business a long time, and I'm sure you've seen a lot evolve over that time period. So what's like the number one lesson that you've learned along the way as it relates to leadership?
Oh boy, leadership matters. It really does. In the early days, the person who was leading the firm tended to be either the investment person or the person who was capable of gathering the assets. To run a successful business means that you have to open up your eyes and mind to other participating leaders, and sometimes know when you're over your skis and you want to stay in your zone. And that's probably the toughest thing for a founder, is to say, you know what, my highest and best use is business development, or my highest and best use is as CIO of the business. And so when you look at, and I've represented the best of them on the buy side, when you're looking at a platform company, you want to see that people are in their happy place of where their highest and best use is. And if it means there's an up and comer who really should be the successor CEO, and the CEO wants to take a step back and move back into business development or investments, that's okay, because that will create a ton of business value. But the best leaders that I know are often quieter leaders that empower their teams and think deeply. And so the loudest voice isn't always the strongest leader at the table. And that can influence value for sure. And it's okay to ask for help and look for a coach, because sometimes there are great budding CEOs. They just need a coach like Ray Sclafani at ClientWise, or a business consultant to come in and do a tune-up, or help them think about broadening the management team, bringing outside players, introducing a leader coming out of M&A. It's okay to say you don't know the answer to everything. The best leaders will do that.
Yeah, that was fantastic advice. And interestingly, I had Rita Robbins on a couple of episodes ago, and she was saying she decided to bring in partners because she's like, what generated success for my business the last 25 years, I don't know if I'm the right person to take it for the next 25 years. And that's a real hard realization, right? There's a lot of ego involved when it's your business, and or if you've just been running the business a long time, and we've seen some major players really leave their roles after many years, and the private equity firms or the owners of the firms bringing somebody in new to replace them. And you're seeing that because it's like what may have gotten you to here is not going to get you to the next level. And I think that's a hard realization. I think it's probably the hardest thing for a leader to do. So great points, Liz. So with the title and theme of the podcast focused on the future keys to building a sustainable, profitable, and impactful business in mind, what is your last line? I know, right? Pick one. What key takeaway do you want to leave our audience with? You said so many great things.
Oh my goodness. In this environment where there is tremendous M&A euphoria, I want to bring people's attention back to 2 points. Clients are the heart of this industry, and the human capital that serves those clients is its soul. Protect these assets and invest in their future, and you will build a good, sustainable business with terrific franchise value. I can promise you that.
Wonderful. I love that you touched on both of those things. That should be on your website somewhere. That was fantastic. If this chair thing doesn't work out, or the investment banking thing, you could go and be a writer. So anyway, that was great advice. You had so many wonderful things to say today. Thanks so much for being my guest, for sharing your insights on M&A, firm valuation trends, your leadership best practices, so important, as well as what a firm needs to do to be set up for success for the future. Hint, talent and clients. So again, thanks again. I'm Suzanne Siracuse. Thanks for listening. And I hope this episode leaves you feeling even more excited to be focused on the future.